Hello everyone, welcome to yet another weekly analysis. For this week, we focus on the GBP JPY, but you know, based on the things that have been going on around the world, you know, wars and whatnot, the US dollar has been quite out of our reach. We've been waiting and waiting for like in the month of February, for example, we couldn't execute on the dollar because it was not giving us the opportunities we needed to execute, right? So, got to hold our hands. Now, you know, for March, we're getting opportunities on the Japanese yen. It's very important to understand this that it is better to trade a stable pair than try to decipher something that is sporadic like the dollar right now. So, but I'm going to tell you something about the dollar, right? It's quite easy because right now the dollar is bullish again on the weekly time frame, or on the weekly time frame is bullish again because it's broken structure, right? It's bullish on the monthly time frame as well, structurally. Now, in as much as we are basically supposed to be going, underneath this level right here, but we are not. We've closed above it. There's something to you. We closed well above it, and this could indicate that we might be ready to push to the upside. Now, all we have to do here in this case, is to look for buys to the upside from this level right here on the DXY. Apart from that, I don't seem to have anything else to wait for on the DXY, right? But if the major, denominator in this case that I've been saying is wait, just wait, right? But the dollar is not our you know, major, cause of making this video. Is the Japanese yen against the pound. So first things first, the stock analysis. We all know this. You have to go to the higher time frame to see to predict what's going to happen. Whilst we go lower to the lower time frames. Now, the first thing first you have to do when you execute, or when you are trying to execute it, in the chart, or in the market, it's only direction. You have to know the direction. Without the direction, you can't do anything. You can't run without knowing where you're headed. It's something to overshoot or undershoot, right? But you have to know where you are headed. It's the first thing. That's the problem, right? Most people come on the chart and then they don't know the first thing they have to do. You just come on the chart and plot lines and think that's gonna help. The first thing you have to do is go on the naked chart and see where it is headed. In this case, the structure is telling us we are bullish. Why are we bullish? Because we are having higher highs and higher lows and a higher high. Simple as ABCD. There is nothing special. There is nothing different. We are bullish because we are having higher highs and higher lows. So now I know this on the monthly time frame because I'm looking to trade in that direction. So I go to the weekly time frame to see what's happening. Are we still bullish? Am I supposed to be waiting in this time, or am I executing in this time? Now, on the weekly time frame, we also come to understand that we are still bullish, meaning we are having higher highs and higher lows. This is a higher high, like so. This is a higher high, higher low, higher high, higher low. Because we've seen a double top or double bottom on the daily time frame, indicating that we are about to have a push. We are ready to execute on the lower time frames. We cannot trade on the weekly time frame. We cannot trade on the monthly, neither can we trade on the daily time frame. But we can come to the daily time frame to trade the trend that it is giving us in that moment. So now we know that the GBP JPY is bullish on the monthly time frame, bullish on the weekly time frame, bullish on the bullish on the daily time frame as well. So what do? We come to the 4 hour and the 1 hour to execute. But let's decipher the daily time frame. Let's explain the daily time frame in this case. Day time frame can be traded, but it is better for us to also go lower, to the 4 hour to catch the pullbacks. Now on day time frame, we also find out that we are bullish. We've had a sheet of structure with a double bottom like so, push to the upside, higher highs, higher lows, higher highs. We are creating higher highs and higher lows. So now you may be wondering what this box for. Now there's something you understand when trading in the forex market, right? These are in-depth rules that you come to find out or run into when you are consistent in the market, right? So higher high like so, right? Higher low. This is what the market does, right? It consolidates for a while and then it pushes up. Now the trick here is this, right? This push to the upside is equal to this push to the upside. Are you hearing me, right? This consolidation here is going to be equal to the consolidation that is going to happen. So in this case, we're able to, have a detailed plan of how long we are going to wait for, how long we're going to expect a pullback to wait to happen, so we could execute in the right time. Because trust me, right, it is far easier to know the direction. It's simple. High highs and higher lows, lower lows and lower highs. It's far easier, right? Market structure, all of that. It is harder to execute in the market than to find a direction. It's very hard. For a long time, I struggled with execution. Even right now, I'm still open to learning new things with my execution, and refining myself and my strategy. Right, it's very important. It's not something to you. You can never arrive. You only learn to master yourself. To be honest. So, but moving back to what I'm saying, right now, this consolidation right here, right, this little pullback you see right here, it is going to be equivalent. It's going to be equivalent to the next pullback, like so. It's what I'm saying to you, just like so. Now, this helps you to wait for the right time, because most people will just buy the moment we touch the area of interest, like so. They will look for buys, bullish engulfing, all of that on the 4 hour time frame and the 1 hour time frame, 15 minute, whatever. They just execute, but then they get stopped out, and then the market goes in that direction anyway. The problem is not the direction. The problem is not your strategy. The problem is your ability to wait or execute in the right time. Trust me, it is very important to be able to execute in the right time. So I'm going to give you two rules that I follow with my execution. The first rule is to make sure that this consolidation you can see right here is going to be equal to this consolidation is going to happen right here. Now, in this case, I've been able to pull back. I've been able to, give myself time to also wait, because I'm not going to look for executions on GJ, even though we've touched this area until Wednesday. Now, Wednesday morning, I'll come and then look for executions. The same thing to you. But for now, I don't care. We've touched the area of interest. But if you also notice, we touched this area of interest the last time, right? We touched the area of interest, but we also playing around. We didn't move until after, on Thursday last week, right? Before the market then moved and then came back for a retest. Trust me. Now the next rule is this, right? I tend to wait for the candle to the for candlestick patterns. It's something to you. So what I mean by candlestick pattern, I mean, if you read the candlestick Bible, the old one, not the new one. No, 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 not the one that has been defined by the West. Go look for the old one, right? Right. It's very important to know this. When the market or when we have a pullback like so, right? You need to see the candles need to tell you, all right, I'm about to have a push. Everything tells a story. Even the candle tells a story. It's something to you. That's why you need to trade the higher time frame, because trust me, the 15-minute time frame will give you rubbish signals, right? So on the daily time frame, I'm waiting because the pullback is happening on the daily time. If it were to happen on the weekly time frame, I'll wait for the information on the weekly time frame. That's how it is. These are the rules that I follow. You don't have to do it, but this is how I will become, one of the best in the world, just like so. But anyway, now what I'm going to be waiting for is this, right? The moment this box is filled up, meaning the consolidation that happened before is now equivalent to the new consolidation. All right. Now, even at that, you may still take a loss. So what I need to do is to see candlestick patterns like a candlestick that tell us that a reversal is about to happen, like a pin bar, like a bullish engulfing, like a falling, sorry, this kind of, sorry, a hanging man, right? So when I see candles like that, hanging man, pin bars, bullish engulfing, this is a hanging man, right? This candle right here is a hanging man, small body, long tail, but in this direction, right? Just like so. So if you could see this around this level and we've completed the box, these two rules are very important. Then I look for executions. Now, your trading plans are meant to help you avoid losses. They're not meant to make you make money. No, 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 no. This is where people get it wrong. They tend to have trading plans and they're like, I should be profiting, I should be making money, I should be making profits. No, your trading plan helps you to avoid taking unnecessary losses. Now, when you avoid taking unnecessary losses, you tend to pick the best trades. Then, when you pick the best trades, you tend to make more profits. That's how it goes. But first of all, you have to cut the losses. You have to stop taking trades unnecessarily. You have to avoid early entries that lead to early losses. That then will destroy your confidence to execute in the next trade, because why? You've taken a loss on GJ, now you're scared. But the market now is about to move without you. These are the rules that I follow. You don't have to follow them, but I will urge you to backtest them, because anyway, I'll just backtest them for yourself, right? So for GJ, this is why I'm waiting for this box to be filled. And when that happens, now this is what I say, right? The last pullback is going to be equal to the next pullback. Let me show you. Let me show what I mean. Now you see this pullback like so, right? Now I've marked these lines. My levels are plotted way before premeditated. Like even before the market got here, I had this level, right? If you've been following and with seeing my charts, you will see I'm not lying. Like these levels are premeditated. Like they are marked months ahead, right? So now if I take this pullback and put it right here, you will see that it is basically the same area of interest. So something to you is as close as it can be, right? My areas of my chart, they help my levels rather help me understand or help me solidify that all right, this place is indeed going to be the place where the market is going to get to before it then has a pullback again. Knowing these things, knowing where the market is going to ricochet from helps me get ready to exit. I'm telling you, it is important to know how to enter your chart, your trade. It is also most important to know when to exit. No, to exit. When you journal your plans, when you're writing your plans, you should have your exit criteria and your entry criteria. Very very important. Trust me, right? So when your exit is premeditated, there's no emotion playing with you. Oh, you should wait a little longer. Oh, you should get out now. No, 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 no. You follow the plan. You trade the plan. The plan makes you money, not the strategy. The plan makes you money, right? So this is my plan for GJ. Have a good week. Ciao, ciao.